So today we're going to carry on the theme with looking back at this year in the stock market for me personally and seeing what stocks have performed very well, because as you guys know, I've smashed the market this year and I want to identify the stocks that have done really well, why they've done really well, and have a little bit of a celebration to what has been an awful 2 years in the market. It's time to finally look back and go, hey, that's done all right, hasn't it? And today I'm going to talk about one of my favorite stocks I own, a stock that I'm up over 60% on, and I've got to say it's one of my favorite stocks, and I actually do believe it's still a pretty decent valuation, and I've got no plans on selling it because I still think the upside is still pretty good on this stock in the next few years. I'm also getting nearly a 6% dividend yield on it as well, which is amazing. Today it's having another really good day in the market after it posted its full year results, and it kind of took me back to the point of view where, you know, this stock that's done really amazing for me, a stock that I've banged the drum on for like the last 4 years saying, this is amazing, I keep buying. You know, this stock is up over 60% for me. If this was the other way around and this stock was down 60% for me, trust me, the amount of times this would be in the comment section, commented 3 times going, oh, but what about so and so, it's down 60%, but because it's up, you know, one of those stocks that you get no credit for, even though you've banged the drum about it for many times on the channel, many years. So we're going to have a little bit of a celebration today and talk about this amazing UK stock, and hopefully some of you guys that were buying this stock with me as well have some really good gains as well, and very happy with the results that came out today. So if you could hit the like button, if you're not here, subscribe. Let's get started. Now really quickly, if you are on the Patreon, I just dropped an exclusive video which is a Team 17 stock request. It's about half an hour long and I look into Team 17 on that video. Really good video with a lot of detail on there. It took me a while to put that one together. And as well as that, if you want some free shares, join Trading 212, link is in the description, get a free share worth up to £100. That is personally the broker that I use. Now getting on to this stock, Hollywood Bowl, one of my favorite stocks. And if I just refresh it here, you can see here today the stock actually finished up 4%, which is a very good day. And it's been a very good year. The stock is up 23% when we've seen a lot of UK stocks really struggle with momentum at the moment. And in fact, for me, I've owned this stock for coming up to nearly 4 years now. And if I actually held the average of my stock when I first started talking about it on the YouTube channel, I would actually be up over 100% on this stock. So this would be in the 100% club once again, another member into the 100% club. But I, once again, don't want to be talking about percentages. I don't want to say, oh, look, I'm up 100%. For me, the most important thing for me is making the most amount of money, most amount of pounds or dollars. So if I see a good stock, I keep buying. And all through this period of time, I've actually kept buying the stock. So my average is up about 65% on the position right now. But the big thing is I'm up more on a pound basis because I kept buying and averaging in on these dips, which has really benefited for me. Now you can actually go back to when I first started talking about this stock, which I think is this video here, which you can see is about 3 years ago, which was around May 2020, which is absolutely crazy. And if any of you guys are holding the shares since then, obviously you are doing really well. So give us a shout out in the comment section if you do own some Hollywood Bowl stock. Now, if you look here, the funny thing is this stock is actually not at the same levels yet it was before the CV times. It's still actually below its February 2020 levels, which is insane. Because if you actually look at this company now from a financial point of view, I actually don't think the numbers would have updated exactly yet. Yeah, they're still on May's numbers here, so you got to imagine these numbers are actually going to get even better. But you see here, revenue was 132 million, it's now 208 million. If you look on a profit point of view, it was 21 million, it's now 31 million. And like I said before, this company is actually still below it on a share price, which is just absolutely insane. 16 times earnings, you know, this company has absolutely smashed it. And when you look at these numbers, you would say this company deserves to trade at a premium valuation, which we'll actually speak about. But yet it's 16 times earnings. It pays a 4% dividend yield, which is still quite attractive. For me personally, because of the average that I have, I actually get around about 6%, over a 6% dividend yield on this one as well, which is obviously really good. So I don't even need to have a good 10% return a year on this one now, because a lot of my returns come from the dividend yields, and obviously my share price return there doesn't also include a dividend, which obviously will add up to a good amount as well. Now the company did come out with some full year results, and the full year results in my opinion were absolutely amazing. And you can see here the title they led with was excellent performance driven by strong customer demand. And obviously this is a leisure company in what was supposed to be a time where people were concerned, spending, being more cautious around spending. And when you're a leisure company like Hollywood Bowl, people are still coming out and spending money in this environment, which is absolutely amazing, which is worth pointing out. Revenue up 16%, adjusted EBITDA up 11%, group profit after tax was up 10%. Free cash flow was down with a few expenses, with a lot of the expansion into Canada, which we'll actually talk about at the moment. Even with the Canada expansion, the cash is only down 6%, which is absolutely amazing. And the dividend stayed roughly around the same. And I'll actually say that I'm happy with that because they made another change in the company with the cash, which I was actually really more impressed with. So I don't mind the dividend staying the same. Now, like-for-like growth was up 4.5%. That's still really good. Obviously, that's like-for-like. You know, the big thing with this that we need to take into consideration is the whole point of this is that they expanded into Canada, and they're also making a lot more expansions as well with new venues. So like-for-like isn't always a good metric with this one, but it still shows you like that's still good growth. A lot of companies would still want 4.5% growth. 4.5% growth at 16 times earnings, by the way, and the profit being driven up as well. Overall revenue up 16%, as you can see here. They did have 13 refurbishments, 3 new centres opened, 13 pins on strings, so obviously that's going to increase the margins rather than having someone that has to do the maintenance on the machine. Pins on strings improve the gross margins, and that's now up to 83%. Solar panels installed, that means it's up to 38%. That's going to be even better for gross margins on energy costs, and obviously if we ever have an energy situation like we've had recently. You can see here the dividend staying the same. Now this is the big thing. In addition, given the surplus cash at the end of the financial year 2023, the group has announced a share buyback program of up to 10 million. Wow. So clearly the management team have gone, yeah, we could pay a dividend, but you know what we need to take advantage of? We still think our share price is a little bit undervalued here. So we're going to put 10 million into buying back shares. I really like that move by management. So we get a dividend, we're also getting a share buyback. Really, really like that move from the management team. Net cash at 52 million. Also, you know, this company has a absolute cracking balance sheet. You look here, there's no debt on there as well. So all this profitability is going to the bottom line, where they can either increase the dividend or, as we've seen, do a share buyback. Absolutely amazing, as you can see here. At least 3 new centres to open in UK financial year 2024, and a strong pipeline as well for 2025. Growing the Canada expansion, which is really good. We'll actually take a look at some of those numbers in a second. And they said they've also got an opportunity to add 10 centres in Canada over the next 5 years, with the potential to grow the group's estate to 130 locations, which will be obviously really good. Now, the only negative that I did have from the full year results today is when we did get on the outlook, there was no numbers of current trading. I would have liked to see some numbers on current trading, and it wasn't mentioned. That was the only downside to this update, so that was the only thing that I was disappointed with. Everything else I'm obviously really happy with. Now, they did put out a presentation, and what was really key is the growth in this new Canada expansion they're doing. This looks really, really good. So if you look at the Canada expansion, this actually looks like potentially it could be the strongest part of the business, which is then scary to say. Like-for-like growth for this area was 15%. The gross margins was 73%. The payroll, they got it down to 28%. The centre level of EBITDA is now 10 billion of a margin of 34%. Now this is where it gets even better. So this is some of the photos of the refurb that they've done. You can see compared to what it looked on the outside and what it looked like on the inside, just look at how smart this is. This looks like Hollywood Bowl in Canada, doesn't it? This is such a good refurb here. Now this is where it gets really exciting. When you look at the numbers that these centres, Splitsville is now doing in Canada, look how good these are. So they spent 4.4 million. The revenue after a refurb has gone up 70%. How good is that? This new location has now gone to the 8th best centre in the group's estate. And that means they've got a return of investment of 40%. So it looks like this risk they took on expanding to the Canada has really, really paid off for them. And if you look at the company here, looks like that's going to be a major growth driver for them in the next few years, and the profitability should follow as well in the next few years. Valuation, I mean, it's still at like 15 times earnings. I think this is absolutely crazy because we look at the company, what it used to trade at before, and if you look here, you know, December 31st, 2019, before the whole CV situation, this was 19 times earnings. It just doesn't make sense how low this is. You've got a company here that's obviously expanding into Canada, that's going really well. The UK estates, the gross margin's improving, you've got a really good dividend, the valuation's good. I mean, it's just absolutely insane how low value this is at the moment. This is a quality UK company. This is one of the best companies we have on the UK market. and it should trade at more of a valuation than this, in my opinion. So I'm still happy to hold, and I'm still happy to collect the dividend yield on this. Now, what was actually quite funny is I've not got around to listening to the call yet because I was at work, so I'm going to listen to this a little bit later. But it sounds like the boss, the CEO at Hollywood Bowl, Stephen Burns, actually said across the whole of the London Stock Exchange, lots of firms are undervalued. It says here that the disparity between the market and private valuation has grown recently and has been emphasised by the increasing amounts of listed companies being bought out at premium. We've talked about this so much on the YouTube channel. We've talked about how undervalued the UK market is, and US companies are coming in and going, we're going to buy that stock because that company, because it is so undervalued. And you can see here, like its rival, 10 Entertainment approved the takeover valued at 35% premium to its then market value. What is also quite interesting is that Stephen Burns actually went on to say, Hollywood Bowl has not received any offers, but Burns said, we are a public company, we are for sale every day, so there's nothing stopping anybody from making an offer. Whoa. I mean, that sounds to me that he went, okay, we've absolutely smashed it in the last 5 years, and our valuation doesn't make sense. So if any of you guys, anyone from the US, anyone from Canada that wants to pick up a company with UK bowling alleys, now a Canadian bowling alleys with a success of a footprint on how to do very well, you want to buy us. That's what that said to me. That said, you know what? You come in with a 30%, 40% premium on where shares are, we'll take it. And I think that was Steve Burns actually going, you know, if you want to make a bid for us, because we're not getting the right valuation, we'll consider it, which is crazy to see. That was a big statement there that I did not expect to see. And I'll be honest with you, I hope it doesn't get bought out. I hope it doesn't get bought out because I really enjoy owning this company. I really like getting the dividend. And don't get me wrong, I'd be happy if it gets bought out. I'd be happy that it gets bought out because I'll make money. But at the same time, I don't want to, because I think in the next 5-10 years, this will be a very good performance for me. Hopefully it goes back to the correct valuation and I'll be collecting a lovely dividend. So yeah, once again, it's kind of saying that there's so many undervalued UK stocks out here. Even this one now, Hollywood Bowl, that has been a very good performer for me. And I'm going to collect, you know, I've collected loads of nice dividends. I'll continue to collect nice dividends from it. It's still a pretty decent value when you're looking at the numbers that they've just brought out, which is just absolutely crazy. So yeah, absolutely amazing stock. And it's still not a bad valuation, and it's been a very fantastic last 4 years holding this one, and I think the next 4 years could just be as exciting holding in Hollywood Bowl. So congratulations to any of you guys that do own this share. Hope you enjoyed the video. As always, smash the like button if you're new around here, subscribe. I'll see you in a bit.